Thanks so much for joining us here on a Monday. I'm Marlon Bowling with you. We're going to be talking now with Rich Nelson of Allendale Incorporated in McHenry, Illinois. And of course, the top story this morning, the news that maybe they have turned down the fire on the trade dispute between the U.S. and China. Things seem to have settled down over the weekend, and soybeans really rallied overnight. I wanted to take a quick peek here, Rich, if you don't mind, at the corn and soybean trade and see what has been happening here in the early morning hours. Right now on the corn market this morning, we are trading about 3.5 higher on July. We're priced at $4.06 per bushel, and December 3.5 higher at $4.23 3/4. Soybean trade really firmed up overnight. We have July soybeans 18.5 higher at 10.17, and November 18.25 higher at 10.26.5. I'll stop there for now. Okay, Rich, your thoughts on all this reaction to what appears to be reaction to the trade news?
You know, definitely a lot of great hope here, and at this point, not a lot based on new specifics here as far as any type of tariffs or type of specifics here. But bottom line is, the president did mention that we've got a chance to see China buy some farm products, and actually, I was quite impressed. He actually mentioned farm products specifically here. At this point in time, this will certainly give us some higher trade today. Where we close, though, obviously, certainly a very good question here.
Okay, let's take a look at the wheat trade as well this morning. And in Chicago wheat, we have July 2 3/4 higher at 5.21. Overnight on the Kansas City wheat market, we have that July contract 2 1/4 higher at 5.41. And on the Minneapolis wheat, we have July overnight about a penny higher at 6.30. Now on the wheat trade, we had some heavy rains and actually hit some of those dry areas of the southwestern high plains. But is it too little too late to matter to the wheat?
Certainly a great question here for us. A lot of people will suggest that this market or this crop has been damaged quite a bit here in this southwest corner of the plains here. But as it stands for right now, I think with these rains in general that are still forecast these next few days, we might see some of the Nebraska crop perhaps improve a little bit here, but probably not too much lined up as far as improvement for that Texas through Oklahoma area here for this week.
Now, in case anyone missed it, late last week there was quite a bit of news floating around that we not only have problems here in the U.S. wheat crop, but boy, there are developing problems in the Australian wheat for this coming marketing or growing year there. Also some problems in Canada, maybe even in, let's see, India. We had heard of Russia, maybe Eastern Europe. So different areas around the globe, not just the U.S. anymore.
Exactly right. So there is a changing story literally in just recent weeks here about this 2018 market picture here. Certainly on the supply end, a lot of people had expected some supply numbers very close to last year. Perhaps now maybe it might be trimmed as far as worldwide production a little bit here versus last year.
Okay, well, we are going to take a look at things as we get further down the road. But, Rich, thanks for helping us kick things off. I appreciate that. If you don't mind, we'll bring you back here in a moment, and we'll examine what to expect here in our livestock trade on a Monday. That should be interesting, too, with all the trade talk flying around in D.C. and elsewhere. We'll be back. We'll be talking with Rich Nelson about our livestock markets when we come back. Well, we're back talking with Rich Nelson of Allendale Incorporated, and he's based in McHenry, Illinois. Now, before the break, we were talking about the potential resolution of the trade dispute between the U.S. and China, or at least partially so. And the soybean market really rebounded this morning. Now, Rich, we don't have overnight trade in the livestock markets anymore, but I wonder how you think the lean hog trade may react, because that has been one key commodity that has been kind of featured in this whole turmoil surrounding China and its trade dispute with the U.S. here. So one thing was soybeans, one was grain sorghum, another thing was lean hogs. How do you think they might act here today?
You know, we will look for a moderately higher trade here as far as this hog picture. Now, a little different than the soybeans. We don't have as much of our pork going to China as soybeans, for instance. In this case, for instance, last year, looks like mainland China here picked up about 7% of our total U.S. pork exports, and in fact, that comes out to be quite a bit lower when you're looking at the percentage of production. So it will help us, probably not fix us in terms of a big jump, but certainly should help here for us this week.
Looked like overnight we had a big surge in the stock markets and also in the value of the U.S. dollar overnight. So that could be something that could come into play in the ag commodities. Looks like the June U.S. dollar index futures were about 200 points higher this morning.
certainly right. I think a lot of people are hoping that this trade dispute issue might be taken off our back, so to speak, and maybe allow this market to run a little bit here on that dollar itself. So that certainly could help exaggerate or continue this general uptrend we're now in for the U.S. dollar value here.
You know, you and I were talking last week. We had the weekly export sales numbers. They were very poor on the beef side, but they were actually quite healthy, quite strong on the pork side. But China was never mentioned as a buyer in any of those. And we have to wonder what may happen now if they do come back in a buying sort of a mood, if you will. The question is, with the dollar higher like that, is that going to temper any buying enthusiasm from overseas?
You know, I do think those are very valid discussion points for them, and I'd actually like to throw in one third extra point here, too,
okay.
and that's the simple fact that Chinese pork prices and hog producers are having some problems right now. We're at the lowest prices they've seen in years, actually, in terms of current pricing, and producers have moved into this oversupply issue. So if we didn't have this oversupply issue in the Chinese market, perhaps we could probably focus on those questions, one or two. But for myself, I would probably question whether they're going to buy a lot from us anyway, simply with their other problem on the pricing end here.
What are the penny calls for cattle this morning? Because we had cash cattle trade late last week, more around the 112 area. That would have been quite a few dollars under what we had the week before.
You know, general talk right now on the cattle side, a little bit lower here for today's trade. Trade still quite a concern that last week's kill was 660,000 head. This was the largest weekly kill going back to 2011. So we're not going to quite say there's a massive wall of cattle, but certainly last week's numbers were a bit more than people wanted to see.
And on the cash hog trade late last week, of course, we had a higher trend during the week around the country. But it looks like on plant-delivered hogs on Friday afternoon, USDA said that the price was basically a little bit lower, weighted average of about 64.89. So we'll see how that shakes out today. The live basis, though, was higher Friday afternoon. Rich, thanks so much. Appreciate it. And we'll talk with you guys again here real soon. Rich Nelson of Allendale Incorporated in McHenry, Illinois.